Hello friends, welcome to your own channel Noiseless Investment. Here we try to decode a company based on the fundamental analysis and get to know if the company is worth our investment or not. Please note I am not a SEBI registered advisor and these are my personal views based on the fundamentals of the stock. This video is for the educational purposes only. Please do your due diligence before investing. Please like this video, subscribe to my channel and click on the bell icon to get the useful information on a regular basis. The main purpose of this video is to mute the noise the operator creates and as a result the gullible retail investors fall prey to. The purpose is to beat the operators by our own acquired knowledge. So today we are going to do a fundamental analysis on Bajaj Auto. So this is the website of Bajaj Auto and as you can see they have got various models. They are into the 3-wheelers and 2-wheelers as well. And so you can get to know more about this company by visiting the website. So let's move on to the fundamental analysis of this company. So I'm moving on to the website called Screener. And here, if we look, the CMP of Bajaj Auto is 4,642 as of 16th June. Now, if we look into the market cap, it is 1,31,347 crores. So, the way in which we calculate the market cap is we multiply this number by the total number of equity shares, that is 28.3 crores. So, here we look into the stock P, it is 21.7, and if we look into the industry P, it is 209, which is quite high. In comparison, this stock is cheaper. Now, if we look into the return on capital employed, how exactly the management is making use of the money that is there in their hand, it is ROCE for this year is 26.5, average ROCE for 3 years is 25.1, average ROCE for 5 years is 26.7, and average ROCE for 10 years is 30.8. If we look into the return on equity, that is how exactly the management is utilizing our money that we have invested in this stock. So in this company basically. So it is 20.5. Average return on equity for 3 years is 19.8. For 5 years it is 20.6. For 10 years it is 23.2%. And now if we look into the promoters holding, it is 55% and none of the and they have not increased their promoters holding. So a very minuscule amount of equity is placed, that is 0.01%. And if we look into the FII's holding, it is 12.4%. Changes in FII's holding is 0.53%. DII's holding is 10.8%, and they have reduced their stake by 0.12%. The face value for this stock is 10, and they have got a decent dividend yield of 3.02%. Debt on this company is absolutely nil, that is 0, and interest coverage ratio is 199, which means that the company is able to pay its immediate loans and interest quite well. Now if we look into the sales growth, the CAGR, sales growth CAGR for this year is 9.99 and profit growth is 11.6. So this depicts that how exactly the company will be able to double our capital. If we divide that by 72, we get the number of years it will require for the company to double our capital. So EPS is 214, which means that one stock of Bajaj Auto is creating 214 rupees for us in 1 year. And if we look into the EPS growth rate, it is 6%. It is increasing our wealth, increasing our EPS by 6% every year. I mean, in 3 years on an average. So if we look into the operating profit margin, the margin which the company is taking home is 17.7%. And if we look into the growth, the operating profit margin for the latest quarter was 18.6. If we look into the PEG ratio, it is 2.92. So there are few chances for the company to grow apart from what exactly they are doing as of now. If we look into the quick ratio, it is 1.53, which means that the company is efficiently utilizing its money and will be able to pay off the debt or anything. If the need arises, they will be able to pay off in a very short span of time of around 3 months. So if we look into the return on invested capital, it is 84.3%, which is impressive. And if we look into the Altman Z score, it is 9.08%. So the company is not going to get bankrupt within a span of 2 years, and that is more important. So what the Altman Z score specifies is that whether the company is going to get bankrupt. If the ratio is less than 1.5, then that means that the company is in a bad scenario. The situation for that company is not good. If we look into the Piotrowski score, it is 7. It is coming out to be 7. So ideally, the Piotrowski score specifies the financials of the company based on 3 parameters. But here, ideally, it should have 9 for any company, but even a score of 7 seems very nice. Now, if we look into the reserves of this company, it is 29,079 crores, which means that the company is able to pay off its. It is keeping these reserves, these cash reserves in its pocket. Whenever the need can arise, they can utilize this thing. Now, if we look into the inventory days, so what we look into in March 2022, the average inventory days were 18, so that has increased to 22. So that means how much time the company is actually taking to move its products from its and they are able to sell this thing in the open market. So this has increased, though from March 2021 it had reduced down to 18 in March 2022, but this year it has increased by number of days, that is 4. Now if we look into the return over 1 month, it is 2.73, return over 1 week is minus 2.14, and return over 1 day is minus 1.69. So we cannot predict if the stock is an uptrend or downtrend, but since 2 of the things are specifying that it is negative, we can say that the company is moving towards downtrend. Now let's move to another website to get the fair value of the stock, and we see that the fair value is coming out to be 4,941.33. So there is a potential upside of 6.5%, and the spread is between 2,688 till 5,820. So this can be the spread. Now if we look into the pros and cons of this company, so there are nil cons for this company, but we know none of the companies are there in this world without a cons. So you can look into this thing, these pros. And now if we will, because this was the top loser in if we look into money control, and we see that one was the second top loser on 16th of June. Yeah, so it had said by 1.69%. Now if we look into the chart of this company, what we find that it had moved away from the top of the Bollinger Band, that is the 20-day moving average, and I have kept that the standard deviation as 1.5, and it has moved till the middle of the Bollinger Bands. So Bollinger Band specifies the moving averages taking into consideration the 20 days one, and now it can move down till this the lower side of this Bollinger Band, which is coming out to be around this one, this yellow line. it is 4,528. So we can expect a level of 4,528 to come down, because the RSI has also moved down from 60 till 57.69, and you can see this MACD black line has crossed this red line in the negative direction, and you can see the volume is also very high for today in comparison to the other days. So if you will consider the volume for the normal days, it comes out to be around 2,55,000, but on 16th of July the volume was around 6,32,000. So in this way there are more sellers, and they are selling the stock. So please consult your financial advisor before investing in this stock. That's it from my side. Thank you for listening. Have a great day.